Hi everybody, this is Kyle Thompson with Tomson Burnham Real Estate. I am a real estate agent in Salem, Oregon, here in the heart of the Willamette Valley, and it is now January of 2023, so it is time for my fourth quarter market report. We are now 9 months in from when the Fed started raising interest rates aggressively and 6 months into a full-blown real estate slowdown. We're going to take a close look at the numbers to see how our local market has been affected and what we can expect moving into the spring market. So stay tuned. We're going to first compare the fourth quarter of 2022 numbers with the fourth quarter of 2021. As I mentioned in my previous market reports, real estate does have seasons, and so each quarter acts a little differently from the rest in terms of real estate activity. So comparing identical quarters 1 year apart takes out any variation caused by the time of year. But because the market has changed pretty drastically of late, I'm going to compare some of the fourth quarter 2022 numbers with the third quarter of 2022 so we get a snapshot of how the market is shifting in the short term. Keep in mind that we are looking at the numbers for our entire MLS, which on top of Salem includes many of the smaller cities near Salem. So our first metric is total number of units sold. As you can see from this chart, the total number of homes sold last quarter was 1,600 units, down over 1,200 units from the fourth quarter of last year and over 43% drop. This is a huge drop in activity. Now, the fourth quarter of 2021 had a record number of transactions, but the fourth quarter of 2022 is low compared to every fourth quarter over the last 5 years. As a matter of fact, it is the lowest total since 2013, when the market was just starting to recover from the Great Recession. Total sales were also significantly lower than the third quarter of this year, which was off significantly from the third quarter of last year. There is no way to sugarcoat this. The number of real estate transactions has dropped through the floor. Next, we're going to look at median home prices. Median home prices have increased 9.6% to $427,500 over the fourth quarter of 2021. That marks a slowdown in the appreciation from the third quarter, which was up 14% over a year earlier, but still well above historical averages for a year-over-year appreciation. When you compare the median home price from the third quarter of this year to the fourth quarter, prices dropped 4%. This drop in the median home price between the third and the fourth quarter is historically normal. We have been seeing 3 to 6% decreases from the third quarter over the fourth quarter for many years. The median days on the market has increased significantly as well. Days on the market has gone out to 68 days from 53 days from list to close from 1 year ago. In the third quarter of 2022, the median days on the market was 55 days. Now, while this seems like a significant increase, when you look at the data over the last 5 years, 68 days, while on the high side, isn't a significant outlier yet. Lastly, we're going to look at the absorption rate. Absorption rate is measured in the number of days it takes to drop to zero inventory. So if there is 30 days of inventory, if no new homes come on the market, in 30 days, inventory would drop to zero. In the fourth quarter, the absorption rate jumped up to 67 days from 14 days in the fourth quarter of 2021, an increase of 380%. Now, an absorption rate of 14 days is a crazy low number and a sign of a very unhealthy market. If you compare the fourth quarter of 2022 to other fourth quarters over the last 5 years, while it is higher, it is not a lot higher. And remember, a balanced market where there is an equal number of buyers and sellers, you will see an absorption rate of around 180 days. So while a 380% increase year over year is very big, our starting point was the second lowest inventory number in history, which skews the results. This is where looking at the quarter over quarter data is useful. In the first quarter of this year, our absorption rate was 10 days, and in the second quarter, it popped up to 34 days. In the third quarter, it went up to 63 days, and in the fourth quarter, it went up to 67 days. The increase has flattened out, and actually, if you compare the inventory numbers today from just a month ago, our inventory has decreased ever so slightly. So while the fourth quarter absorption rate has increased a significant amount from the last year, the rate of increase has nearly flattened out, and in the short-term data is showing that it turned the other way. So what conclusions can we draw from all this? The data shows the number of transactions decreasing significantly, but the inventory is staying fairly flat while prices are still edging up. It is the lack of inventory that is keeping pricing from dropping. More than ever, there is very little to buy. And when a good house comes on the market, a house in a good neighborhood that has been well cared for and doesn't need any big repairs, those homes are selling quickly. I was recently out with a new client, and in the 12 days from when they picked out the 10 homes they wanted to see and when we set up showings, 5 had already gone under contract, 5 of their favorites. A couple had multiple offers even. None of them had been on the market for longer than 14 days. Good homes still sell fast. For buyers, if you're willing to take on a house with some defects, you are in a better negotiating position today than you have been in quite a while. Even if you're not willing to take on a fixer, you're still in a better position than buyers have been in for years. Last weekend, I got one of my buyers under contract on a great house that needs almost nothing. Were we able to negotiate closing costs, repairs, and a home warranty? Yes, we were. Were we able to negotiate a healthy price drop from asking? Yes, we were. But what we weren't able to do is negotiate a 25% price drop because there was a second offer on the house. For sellers, the days where buyers are bidding up prices, waiving home inspections, and taking any and all defects are over. To sell a home today, it needs to be in good condition, it needs to not need any major repairs, and not be priced over comparables. Homes that need a lot of work or repairs are starting to sit for long periods of time. And that, folks, is my fourth quarter market report. If you liked what you saw here and want to see more, hit the subscribe button you see on your screen and you'll be alerted when my next video goes live. Next time, I'm going to do a deep dive on the numbers and compare this housing slowdown to the last slowdown during the Great Recession of 2008 through 2012. I'll see you next time.